Hello and welcome to a brand new show of Market Makers. My guest on the show today is Samir Arora. Samir, good to have you on the show. Good to have you back in India.
Good morning.
Characterize the market environment for us. September has been a rewarding and a dream month. Do you think this is as good as it gets, or this is the beginning of good times?
Well, this is definitely the end of bad times and the start of a new beginning now. Whether this is as good as it gets, maybe not that much, because there is still a lot of uncertainty in the world. Plus, you have only 1 year left of the government, and after some time they'll have to again go back to focusing on that. But because of the low expectations that everybody had and the low positioning that everybody had, I think this is as big as it gets from at least last 2-3 year perspective.
Is your NAV shining now because local equities have gone up and rupee also is appreciated against the dollar?
Yeah, so this has been very good. That's why I'm wearing a white crisp shirt instead of being down in the dumps. But in general, the main thing is that as soon as the market gives you one story and then your performance also, your equation with the investor changes. So now when I talk in the last week or 2 weeks only, since these things happened, to the foreign investor who did not invest or who did not respond to my email, that whole equation changes. And once that changes, then you know that plus minus a few weeks or months, not all of them, but some of them will start investing because we have the points and the bullet points and the performance. The only thing is, we cannot convince your viewers, the domestic investors, because they I think classically suffer from what is called the attribution effect, which I read recently. Attribution effect means all good things that have happened, I have done, and all bad things that have happened, somebody else has done. This is done in cricket, for example. Mr. Dhoni will say the ball was slippery, but when it was good because we practice every morning and we go to the net. So same thing with our investors. They feel that all the things that are bad are because of government and Congress and reforms have led to price hike. But the fact that I have 2 cars and I have 2 EMIs that I have to give, which my father did not have, is all because I suddenly started working harder than every previous generation. Main thing is, the reforms have led to a lot of growth and a lot of success for India. But we still find that the Indian public does not support it, and so politicians are to be blamed. But quite a bit of the blame can be that the public has not understood this connection between reforms and their own growth and their own success, and the fact that they have 2 cars instead of 0 cars and 500 channels instead of 0 channels and private sector service for banks and things like that. They think that is because they suddenly started working harder than anybody in the world, which is not true.
So now that mood has changed, participation is not there, market is no longer polarized, all sectors are chipping in. How have you changed your portfolio strategy?
So what we have done is that because we are otherwise cautious guys in the sense that we don't buy certain sectors, like we never buy metals, we normally never used to buy real estate and generally PSUs and stuff like that. We thought that the best way is to reduce the shorts. So even though we don't have the biggest bank sectors which are currently going up, but because we have increased our net exposure very significantly, our normal average net exposure, that means longs minus shorts, on average for the last 5-7 years would have been 55-60%. In last year, in the last quarter, it would have been near 0. Today it is near 90%.
This is the highest you've had?
Yeah, actually we crossed 100 also a few weeks ago. We are now more than 110 long and only 20 short. Normally we would have been 90 long, 30 short. We still keep some short because that is a discipline, and so that you can add to it if something goes wrong and something you feel underperforming. But in this last 15-20 days is the highest net, even including 2007. Even in 2007 our net never went beyond 70-75.
Which means you're all in?
Yeah, we are all in.
Are you buying more of the same, or have you changed the complexion of the stocks you're buying?
No, first of all, we have reduced all the shorts for the first thing. Second is because our longs were always fully invested. It's more difficult to change them here and there. But on the margin, we have also bought sort of slightly higher beta, plus we bought more in futures, which are easier to add to, and you can add them in bigger chunks. But we don't want to change our core. We are not selling our defensives in some sense, you can say, because the idea is that if the amount of money is fixed, then you can say that money will move from defensives to cyclical or whatever. But the bet is that money is not fixed. The amount of money increases. But in the beginning, the cyclicals or whatever go up because of short covering. That we should not take it that this is the new path. So, and beyond a point, we don't care for index, we care, but not so much. If the market is going up a lot, and I also go quite substantially, not necessarily beating the market, it is good enough. And I can change it by having, like I have 90 net or even 110 net I can make. And I would rather do that than change the stocks. But on the margin, if you ask me, yes, we bought, a few sort of, what you can say.
The rally what we've seen in high beta, infra, metal names, so to your mind that is a function of short covering. That's not the real rally.
For the moment it is. But you can stay at the new levels, so you don't have to go back because if somebody was given up and was about to go bankrupt and he doesn't go bankrupt, so therefore you've saved them and they will move on and you will give them a new breath of life. But whether that will immediately change, it will not, but their valuations can permanently change. So it's not that therefore that is wrong. That also was part of the thing, that there was too much shorting, including we were also short in some of them. In last month, although we had a good month, on the shorts we would have still lost 10%, except that the amount of shorts was reduced and therefore it was not so bad.
So directionally, where are you short?
Directionally, we are short the old thing, we are short telecom, we are still short one or two power equipment, things where we think that, it will not change in the next 3-5 years or 2 years at least. You can keep bringing them up and down from valuation point of view, but not so much to do with actual changes. As you said in the beginning, how many things can change? In the beginning, the only thing you can change is a top-down allocation, a currency strengthening, maybe an interest rate cut. Therefore, the longs are mostly all in, the new longs, old longs are all basically financials.
Samir, one should never challenge the market mood and the flow of liquidity. Mood has changed and liquidity is strong. Will you be surprised if Indian markets kiss a new high this year itself?
I don't even know what is the new, 6,200?
6,200, approximately 21,000 on the
So
index.
that is now it is 5,000, some 700 something.
Almost there.
So it can easily be 10%, that means, right? Yeah. In rupee terms, it can easily reach. I think it will reach, if not now, then in Jan, Feb. Then we'll again get nervous about the fact that a budget is there and whether this budget will be populist, not populist. I think the next year will be populist. But we don't consider you to, if you give money for food or you give money for something, but you genuinely take it away from somewhere else. It's nothing wrong with that. That's why I feel that the TMC and all are so wrong for to say that you should not have diesel price hike and you should not petrol price hike. You take money from that common man who's actually not very common and you give it to another common man who really needs, who's below poverty line, nothing wrong with it. But they make it look that somebody who has 2 cars and who has a house and he should not pay for petrol and market price. Absolutely wrong. So it will be populist, but as long as it looks reasonably justified and the target audience is right, there's nothing wrong with that.
Samir Arora I've interacted with in last 10-15 years. You believe in always identifying concepts, whether it was IT or private banking space. So what have you identified as a concept? Where do you think we could be staring at a multi-year bull run?
Well, relative to what is happening in India, I think your sector is having the biggest delta, that is digitalization. Because look at it in a big picture way. Suddenly, 200 rupees into maybe, 10 crore homes may have cable into 12 months in a year. Suddenly that much revenue, whatever that you had to, suddenly becomes official organized revenue for cable companies and therefore for, the other guys in the pipeline. So even if the market cap of these companies did not change, if the profit of these companies did not change, but only the revenue went through the books of these companies, how would you look at it as an analyst? So let us say nothing changes except that this revenue comes through 3-4 companies and then you go give it to the same old guys, whoever was keeping it before, no change in bottom line, still a loss, everything wrong, except that your revenue is $2 billion. You cannot have these valuations because you will say, how can a $2 billion company have a 200 million market cap, 100 million market cap? Therefore, over time they will upgrade, over time they will bypass somebody, over time people will buy movies on their own or they will get HD channels. And similarly for content companies, not content companies, Z and whatever, and you guys are not listed, but Z, TV18, etc. That for their extra free return that they will, free income that they'll make from subscription, there is no cost attached to it.
So you're buying the distributors and you're buying content producers and you buying the entire basket.
Everybody.
What about IT? You like that structure, you track that space with a magnifying glass. So what to your mind will now dictate IT stocks? Rupee, billing rates or outcome of US presidential elections?
the US presidential election, although today it appears that Obama has lost thoroughly in the first debate, but that won't change much. I think those are all talk. Basically, I think the currency, when it used to depreciate, I used to feel that, why are we not giving credit to the tech companies for the fact that we have rupee companies and rupee earnings, but nobody gave it any credit. So I think the currency, people don't care. People care only about US dollar denominated growth rates. And so we have them about 8-9% of our fund, which is lower than the market, but we are not going to sell on the basis that currency has strengthened. Ultimately, we are a hedge fund. If the rupee goes up, as in becomes stronger, and our IT companies do not do well, we don't care. Imagine for the balance 90%, you make free 5-6% in a month last month. Who cares about what the IT company did? So it is a natural hedge. But more than that, people don't look at it. That's what I've seen, that they don't look at it in rupee earnings. They look at it in dollar earnings. So suddenly, why worry about it?
Secretly, are you happy that Infosys has appreciated from your buying price of 2,200 to 2,600?
Well, but we have some other things that have done even better, which is basically Tech Mahindra Satyam combo. So that was our new purchase, but before these things happened, when they did that placement around that time. So that has been a very fast rise, but we are keeping it.
What about banks? And we always discuss banks. Are you still confident of holding HDFC Bank for next 10 years?
Number one, holding, nothing has changed. Its weightage has come down in the last month because it hasn't gone up as much as others in the month. But generally, we're going to keep all of them for a long time.
What makes you so bullish on HDFC Bank? It's a mature business, big market cap, just about everybody owns it. Somewhere, are you worried about the over ownership of HDFC Bank?
No. What makes you more confident about me? Old, 50 years, been around for 20 years, do the same thing every day. They also do the same thing every day. Nothing wrong with it. Actually, there is value for doing the same thing every day.
So they're predictable.
Yeah, predictability is good. Main thing is that, against a 30% compounding, which I can logically justify in a big picture sense. How? Okay, so GDP growth in nominal terms is, let us say, 12, 13, 14%. Therefore, some credit growth will be another 4, 5% extra, which is always the case, 17, 18%. These guys will do a little bit more because you are still market share gaining from PSUs. Your branches are 2,500. State Bank has 13,000. So State Bank cannot increase its branches 10%. Actually, doesn't even increase 1%, I believe, or maybe a little bit plus minus. Whereas these guys can increase 200-300 branches, so you get another 2% market share. So you go on to 21-22%. Now this can go on for 5 years. There's nothing that we are saying that you are doing good. But we know separately that through every crisis, whether it is broker crisis, whether it's market crisis, FX selling crisis, global crisis, these guys have somehow...
They are immune.
They are not immune. They have been smart. And they have been cautious, or risk controls are there. So why should we today worry about them? Plus, we have always seen that when a good company does badly in one quarter, then it falls 5-10%, the whole world will give it one more chance. At that day, we can evaluate and see whether it looks good or bad. Because it will not suddenly fall 40, because some new guys who never bought it will say, no, this is one-off, means in practice. Unless it's an absolute disaster, if it is a little bit of a disappointment, the stock will fall that day. Maybe it will fall more than others. But it won't fall 25%, it will fall 5-7% that day. It looked very huge that day. And then we will start evaluating the company. Today we are not evaluating. Whatever they are doing, they have full freedom to do because of what they have done in the past.
Are you worried about your position in Ashria? Are you confident that you want to hold on to that position?
Well,
I'm asking you a pain point here.
I can tell you that when the new ownership comes out, because it is just the quarter is over, it will be known. It's already known. Known means it's already happened the quarter, that I personally own more than 1% of the company.
You're extremely bullish.
So that is
it's a high capex
because it was not there in the previous quarter.
But Ashria still is a high capex business. For growing, they would be requiring a lot of debt, and that's not the kind of business you like. The businesses you like, those are businesses which grow on a small capital and grow because of cash flow.
No. I don't want to do that. It will be known. But the main thing is, I like new things, and I think it's a good new sector or new theme, and so I believe in it as something which India needs, which nobody else has done. See, there's another way of making money, which is part of this only. But the thing was, it should be something which is required by India. It is something which you can in 5 minutes understand that yes, this is a value-added thing which India does not have, or the industry doesn't have. Plus, nobody else should be doing it. It should be a bit difficult to do, and you are ahead of everybody else. If I look at all my ideas in that context, I could say the same thing for all of them, except that, okay, capital was less, more, it doesn't matter. But the main thing is that nobody else is doing it, and nobody else can easily do it, because you need 100-acre land, and you need it near a big city. And the use of that facility, there is not even 1/4% chance that you don't need it and nobody else has it. So it will automatically do well. Debt is bad, but debt is bad which, is sort of a working capital debt. In this case, it is a project debt. Project debt is part of life, as in you need it, but once it is set, you will make money for the rest of whatever X number of years and you'll recover it. Anyway, it doesn't matter. It is one of my bets. So I have this bet.
This is 2012. By 2013, 2014, which sectors, which businesses to your mind could go through a process of P expansion and P compression?
That is difficult to say right now. Right now, we would be happy if we got 15-20% return per annum, which would be basically, in theory, coming from earnings only rather than from earnings plus a P expansion.
In dollar terms or rupee terms?
No, we talk, because our analysis in rupee, dollar we take as it is, we cry those days and we celebrate, but we don't hedge it, and we make that as an excuse in bad times to the foreign investor, but in good times we don't remind him that we made money out of currency. But he knows. We don't have to tell him everything unless he asks. So the thing is that PE expansion will happen when there's a next real bull run. In a bull run, we have seen in the past that P's go to 20-25.
So are we close to a bull run?
No, that you're not close right now.
We are not close.
That needs...
This is a cyclical liquidity-driven rally.
This actually is a second round of reforms which you can do more. But because the event of elections is in between, and this public, which we want to convince that reforms are good for them, they don't look at reforms as good for themselves because they are living and enjoying all the fruits of it. But they consider that as if they earned those fruits separately, and therefore they look at the reforms as negative, because 10 years ago gas was this much, except that you didn't even have a gas and you were cooking on kerosene, but they consider that as their right. So because of this event of elections in between, and the fact that only in the last month has the government suddenly changed, we don't know what they will do after 6-9 months. So you can't have a big bull run. You can have an okay run, which is what I think will happen.
So for those who are watching this show, they are feeling left out, they are feeling rather annoyed that they have not participated in the month of August and September, how should those investors now start
participating? They should go and chat and criticize the government. They should go and criticize that everything is corrupt, everything is fraud, and whatever they have earned, because they studied.
How can they make money?
They cannot make money now unless they wake up. Obviously, if they're seeing the program, they must be at least half awake. Therefore, they should go and buy the first mutual fund that they already invested in, or some new one, and basically get into the market, and then over time see which stocks they want to buy on a personal level, but at least get into the market. Basically smell the grass, that it is very fresh and green.
But for those who want Samir Arora's investment advice, what would you advise?
That itself is an advice that equities are doing well, and even if you look at in the past, if you compare everything through 2008, then that would be a bit wrong, because 2008 was really horrendously bad, but 2008 is also not a new norm. And even if you had 2008 in between, but you were not invested from 2007 December, you had a good performance even through, if you had invested in 5 or 6. The beauty is that people who have invested in 5, say in 2008 we lost 50%, because they counted from 2007 end. So what they say is that 2005 to 2007 performance was theirs, but 2007 end to 2008 is because of this fund manager. So that is my point. If you look at it over any longer period, you could have come halfway through 8, you would not have been so bad. You could have come halfway through 7, you would not have been bad. But if you say from 2007 December I am down 10%, well, sad luck.
What about staples? Do you expect FMCG defensives? Do you expect them to go through a time-wise correction or a price-wise correction now?
No, I mean, if you look at the real staples, we don't have. But consumer companies we have, which are not growing at 10% and having multiples of 30. But companies grow at 20% and have multiples of 20 or 22, 24. We also have. Basically, growth will be
Which are the consumer names you own?
We own Bata India, and we own SmithKline Consumer, and here we own many things. But the thing is that we are not selling any of those to buy, because in some sense, the fact that I reduced my short, for me, I have done my bit of buying. Effectively, I had to buy those. I had to buy the high beta to cover my short. So that also is buying, right? So for me, it's easier. I've covered my short. I'm okay with that. And the difference is, unlike a mutual fund, which on a weekly basis has to outperform the index and things like that, we don't care that much. As long as it's a decent amount, it doesn't matter the market's up 20, we are up 16. We don't tell even our investor how much the index is up, he doesn't care. On the way down also, he doesn't want to be reminded. Yeah. We tried to remind him a little bit at that time, but not so much. The idea being that it's an overall thing you make in good times less, but in bad times you lose less, like it happened for us last year. And therefore, over a cycle, it is his wish what curve of returns he likes.
Are you looking at picking up something from the rec of infra or the capital goods space, or you're nowhere going close to that?
No, we have bought.
What have you added from there?
We have added a few here and there. Basically, something which was okay, and for example, we never had L&T before. Now we bought a little bit of L&T.
That's a tactical trade, but
yeah. But so for the moment, in future, but the thing is that can easily turn. It's not that change to a permanent position. So that can be done. But I am not going and buying a beaten up name which makes losses, although it may have given the biggest return in the last round and also in January. But the difference is in January, we fought it for a few days. Here we didn't fight it. On day one, when the diesel price hike happened, and even before FDI and retail and all happened, which was on Friday night, that day only we covered half of them and said, we don't want a repeat of Jan where the high beta really went up. And it's not that we had to own it. We were short.
But you know, surprisingly, high beta has not done exceptionally well. Markets are still looking okay. I mean, FMCG is holding on, pharma is holding on. Yeah. It's a very broad-based market.
Because, as I told you, because new money is coming in, so the new money cannot only buy that. Some part of the money is basically buying that to cover it short. And second is an overall direction may change a little bit. So if you're putting 100 new, instead of 40, you'll buy 50 of maybe whatever defensive, of non-defensive, but you'll still be buying the other part. And the old money is not willing to sell out. If basically the domestic guys had not sold, you may have been at already all-time high. If you look at it, the power of this year's money was very strong because this year there was no IPO to match it. There was not really a divestment to match it. In 2007, the money may have been similar from foreigners, but in addition, domestics were buying. Yeah. But on the other hand, you also had these selling.
Government.
So now private sector, that is all your viewers, they are the overhang on our market. So once they give up and they panic and they buy, then we will see whether the bull run is stopping or not. So the real message is, this bull run will go on till you, as in the viewer, decides to buy, because he's going to be late if he doesn't, sort of react quickly.
But what could be the next trigger? Globally, if I look at the central bank policy action, we already have a QE3. ECB already has fired a bazooka. Policy reforms have kicked in. What's next?
Next, from an India point of view, is that you will have interest rate cut on October 30th. You will have SHOM committee being accepted.
Are your investors convinced with the clarity on GAR?
If they accept it, then it's done. Because first thing is, they have said postponed by 3 years. So that part is very easy to understand. Then we'll evaluate after 2 years. But on the other hand, the other issues in it, for example, waiving capital gains tax or substituting with STT, it is black and white. So it will be useful not only for foreigners, but also for the Indian investors, very big.
Give me an absolute money-making idea, then we'll wrap the show.
Indian stock market.
What to buy within Indian stock market?
Thank you very much.
Appreciate your time. Thank you for joining us.